So first thing first, before we dive more into details, I would like to appreciate you guys for tuning into live. I really appreciate it. And someone asked me a question yesterday if you can really make money from forex trading. And my answer to that question is yes. Though it is not overnight. If anyone tell me like last year that bro, last you become a full-time trader, I'm not going to believe it because when I started little. I was focusing more on taking signals just like that. And I started seeing growth step by step. The growth did not happen overnight. Yet the growth did not happen overnight. It took some time. But now we are seeing growth. Every business you are about to go into, you will not become profitable in that business overnight. It will take you some time, you get. But the most important thing when doing a business is consistency. How you strategize your move of doing business. Those are the important things to grow as a businessman. Take forex as a business. You get. Take forex as a business. Don't take it as get rich quick. You get. I will tell you this. Forex can get you rich quick, and it can also send you to your village. If you learn properly, it will get you rich quick. If you learn properly, that's just the honest truth. Proper learning, you get. And learning will not take, I cannot deceive you and tell you you will become profitable in 1 month. I will not tell you that. You will not become profitable in 1 month. It might take you 7 months. It took me about 6 months before I started seeing profitability, constant profit back to back. You get. It took me 6 months. So if you are having the mindset that forex trading will just be as you enter sharp, you don't make money, it is best you start quitting now. That's just the honest truth. So it will not look like you are being deceived. It will not look like you are being deceived. Anything you are doing, it takes time. But if you are smart, it is not supposed to take you more than 3 to 4 months to start seeing little results. You get. If you are smart, don't be dull. That just forex is a game of probability. Let me put it like that. Play the game smart and you will see results. I can tell you that for sure. Forex can turn you into a rich man, but you have to understand the market flow very well. That's just the important thing. And for the lessons, I said on topic, there's something we're going to be learning called market structure. Please, during the time when we get to that particular phase of learning market structure, I would like for you guys to be active and learn attentively. Very, very important. Because that's the most important thing that will take you to success in trading. I can teach you multiple strategy. You will enter the market. You will use this strategy. You will use this strategy. You will still keep losing money. But if you understand market structure shows you who moves the market. You get. It shows you who are in charge of the market. People controlling the market. Market structure shows you when not to enter, when to enter. It shows you, oh Bob, if I enter from this place, I make money from this place. You get. That is how it is. You must understand that thing very well. So please, I can say you can miss other class, but when it comes to the market structure during that period, do not miss it, because the moment you understand it, any strategy you learn will become easy and you will see results in trading. So let's dive to the major topic for today. I say the first topic I will be talking about is Forex intro. Again, Forex intro. Let me type that out. Please, can you guys see my screen clearly? Hello?
Yes, sir. Yes.
All right. Forex intro.
Yeah, it's clear, sir. It's clear, sir.
All right. what is a broker? Those are the major things we'll be talking about today. I will take you guys through it step by step. I cannot just rush you and start telling you, okay, do like this, and you'll still be confused. Step by step, from novice stage, you get. That's what we are doing, from novice stage, like who don't know anything about trading in general. That's what we'll be doing today. We'll start from the beginning. What is a broker? How to use TradingView. That's how to use TradingView will be the last thing we'll talk about today. Okay. Time frame. What moves the market, and candlestick. Okay, candlestick before what moves the market. These are the topic we'll be focusing on today. I would like for you guys to write them out if possible. Let me enlarge it on my screen. Write them out. These are the topic we'll be talking about today. Forex intro. What is a broker? How to use TradingView. How to use TradingView will be the last topic we'll be taking today. We'll start with Forex intro number 1. What is a broker? Time frame, candlesticks, what moves the market, then how to use TradingView. Because in order to navigate the market, you must know how to use TradingView. You get TradingView is, I will explain the entire concept of technical analysis when I'm explaining TradingView. You get, so I'll add that in alongside TradingView. Technical analysis, I'll add it alongside TradingView later. So these are the things, write them out so we can proceed. So one quick tips I would like to give you, see, Forex is also known as foreign exchange. Right? You can write that out. What is Forex trading? Forex trading is also known as foreign exchange. Let me give you one brief explanation. Imagine you are traveling to another country and you need to exchange your money for the local currency. You will go to a currency exchange office and exchange your money, let's say US dollar for euro. You get, that's why you see we have things like pay. You see US to US dollar to euro. You get Euro USD, which is you are trading the euro against the dollar. Then USD JPY, you are trading the US dollar against the Japanese yen. You get, so I will explain that thoroughly. Those are part of the Forex intro. I say, imagine you are traveling to another country and need to exchange your money for the local currency. Assume you are traveling to US or any country. Again, you will go to a currency exchange office and exchange your money, let's say US dollar for euro. Same way when we get dollar, we go to the local currency exchange. Like the way sometimes we go to meet all these aboki them, then they will exchange it for us. Again, in forex, traders buy and sell currency online. Again, we don't need to go and meet the aboki them and do all those things. We buy and do those things online. You get, so during the process of buying and doing those things, we are hoping to make profits. We are not just going to go and swap our money. We are hoping to make profits from during the swap. You get, that is what Forex is about. And I will break it down. Imagine you buy the euro for $1,000. You get at an exchange rate of €1 per. Let me type this out to make it easy. Come in, guys. Let me type this out to make it easy so you can understand it. You buy 1,000 euro. Euro, I will abbreviate it to EUR with US dollar. The US dollar will make it USD. Get with USD at an exchange rate of. I will also give you guys a more simplified explanation. This one are the big grammar. Then we'll go to the simplify of 1 equals to let me type this out. Where the fuck is my equals to? 1.10. Again, then later that day, let me put 1 here to make this thing easy. 1. Then later that same day you get. Then I'll add 2 here. After writing this, I'll explain it in a more easier fashion so you can easily comprehend it. Later that you exchange the exchange rate to 1 euro equals to 1. I beg, let me just clean this and make it more easier for you. Money, let me use pigeon. Imagine you are trading the euro against the dollar, or let me use the USD against the naira. When you are trading, if you are trading USD / naira, you are trading the USD against the naira, meaning you are trading it that the moment price goes up, it counts. Let me put it like this. When you place a buy trade, you are anticipating that the naira will go up, you get. And when you, let's say if $1 is equivalent to 1,500, you get my point. And once price move from 1,500 to 1,600, and you bought at the rate of 1,500, you made a profit, you get, of 100 naira. So no need for me to complicate this thing for you. So that is the most important thing. So whenever we are placing trades on Forex, the base pair, we have what is known as the base pair and the quote pair. You get. Ooh. If it is USD against Naira, automatically you are saying the USD is what controls the Naira, meaning once price goes up, you're anticipating Naira to follow upwards. Once it fall down, you're anticipating price should drop, meaning if it goes up, it increase the price of USD increase in Naira. $1, let's say as at let me use this simple explanation. Price goes up few amounts, $1 equivalent to 100 naira, then it goes up. You see the candlestick goes up. It will start counting from 100 to 200, 300, 400. You get. Then if price drops, you're anticipating the naira rate to drop down. You get. So if the naira rate before, which is the dollar to naira rate, was 1,500, if the price starts falling down, you will see the naira rate start falling down as well to 1,500, 1,200, 1,300, just like that. That is the most simplest explanation I can give you for that. So that is what we do in trading. You get, we are trading two pairs against each other, anticipating one drops. You get, if you are trading the euro stroke the dollar, you're anticipating whenever price goes up, euro gains value, dollar lose value. You get, similar to when you are trading the USD to the naira, you're anticipating once price goes up, the dollar gains more value, the naira lose more value. If you are trading the naira to the USD, let me put it like this. Where is this thing? You know, the first pair is what controls USD / naira, NGN, if I'm not mistaken. Meaning, if price goes up, the USD is gaining value. If price falls down, the USD is losing value. Why, if it is like this, if it is the other way around NGN slash USD, if price goes up, Naira gains value. If price drop, dollar gains value. You get my point? So that is what this trading of a thing is all about. We have what is known as currency pair, cryptocurrency pair. You get, we have currency pair, cryptocurrency pairs, different forms of trading, stocks, synthetic indices, and so forth. You get, so we have multiple trading type. So whenever price goes up, if you are trading the Naira to the dollar, once price goes up, the Naira gains value. If you are trading the dollar to the Naira, if price goes up, the dollar gains value. If price drops, the dollar loses value. You get? So that's the most simplest explanation. No need for me to start typing big grammar for you guys. I don't want to make the class hard for you guys to understand. I want it to be easy, so we can be able to break things down a lot faster. So let me write it out in a simpler way, so you guys can write it out. You are simply trading two pairs. You are trading two pairs against each other, two currencies against each other. That's what we are doing in Forex, trading two currencies against each other. So if you are trading the dollar against the Naira, let me look for US dollar to Naira. I'm sure I can show you guys. Okay, this is it. This is how it looks like. Candlestick on this thing is trash. This is why people don't fucking trade Naira. But God have mercy upon this. So you can see, this is the US dollar to the Naira. These candlesticks you see on my screen, these things are price movement. This thing represents the movement of price. You can call them the visual representation of price. We'll get to this thing I just talked about sooner when we're about to talk about trading view. You know, I said I will also add technical analysis to trading view. So you can see when price started dropping down, currently the price of the US dollar to the Naira is 1,460 Naira 53 cents. So far, price is dropping. You can see price falling down. So you can be able to monitor the price here. So as at when price went up to this particular zone here, if we use this zone, you can see the price went up around this zone. So this was the highest point price reached before price started dropping. So let's look at the price. So what day was this? This was April 10, 2025. That means April 10, 2025, that was Thursday. The price of the dollar to Naira went so high, it went to 1,609 Naira 11 cents. So before price started dropping, this was the highest point price got to. Let's see how much price got to around this zone. 1,687 Naira. Okay, so once price is dropping, you see the price. Once it's going up, you see it. So in other words, the base currency, which is the first currency, like this now, the base currency is the first currency. If you see US dollar to pair, so the first currency you see there is the base currency, US dollar slash euro. If you see something like this, the very first currency you see at the front is the base currency. Then the second currency is known as the code currency. Let me type that out. Base currency is the first currency. And the code currency is the second currency pair. So in other words, we are trading one against the other. Once one gains value, the other one lose value. That's what we are doing. One gains value, the other loses value. That is the most important thing about trading. One gains value, the other one loses value. I'm coming, guys. So if you have any question, you can ask now. This is question time before we proceed to the next topic. If you have any question, ask now. Questions.
Okay, sir. So I just want to say to confirm what I've been hearing. So is it when the price go up, the third pair, which is the base currency, is value? Why if the price is coming down, the quote currency is any value? Is it true or false, sir?
What we explained is that correct.
Huh?
Price when price is going up,
Yes.
the base currency gains more value against the code currency. You get then once price is dropping down by my network, the code currency starts gaining value. It starts regaining value. Yeah.
Okay, sir.
So do you understand that now?
Yes, sir. Yes. Thank you.
All right. So any more questions, guys? All right, let's head down to the next. All right, guys. Let's head down to the next topic. So for the next topic now, we'll be talking about coming. Okay, we are at US 30 before. Let's go back to US 30. So by the time we'll be done with the entire section, I will show you guys multiple pair. You will pick your pair, you will pick your entry model, then you will master something that is unique to yourself. You get that is the most important thing when it comes to trading. Master something unique to you. You get then you say, yes, this is my style, this is what suits me, and this is what generates me the money. There are different ways of approaching the market when it comes to trading. So, what is broker? In my own explanation for broker, I will not give you some big grammar explanation. Broker to me is just see broker. The reason why I say broker is like a bank. Whenever back in the days, if people want to trade the forex market, they need a lot of money. You get So they need a lot of money back in the days when trading the forex market. Like when I'm talking about a lot of money, I'm talking about a lot, like a lot of money. At least nothing less than 10K dollars. You get that's what you need when trading forex market back in the days. So what broker does for you, broker gives you access to that market. They give you access to the forex market, which is so broker gives you access to the market. That is what broker does for you. It gives you access to the market. Imagine like we have big companies that sells things like biscuits, cooks, all these things. You as a retail trader, like you're a store, guys, because people with stores, retail traders, you cannot just go direct there, you get. So you need something that will stand like a middleman. That some people if they want to buy things to many people will gather the money, give one particular person, then that person will go because that person is a big buyer at that company. You will be able to access the company, buy, then bring the goods, distribute to the other people that tagged on, and they will start selling. You get that's what broker does for you. Broker connects you to the market, so you cannot just dive into the market. People that can dive into the market, the people we call market makers, those are the people that can dive straight into the market. Who are the market makers? Big. My network is messing things up. Big institutions all around the world, those are the market makers. Banks, big companies like Tesla, almost every company, shares and all. Okay, those are the things that move the forex market. It is not that the market is just there. The forex market is the biggest institution around the world. It prints nothing less than 3.5 trillion every single day. Nothing generates that amount of money. Imagine 3.5 trillion sitting in the air. Your job is just to access it, be skillful, and collect from inside. That is forex for you. You just have to be skillful, pinch small, take, pinch small, take, pinch small, take. You get my point? So the broker acts as a middleman between you and the market. Since your money is too small, all these are money back in the days, like I'm talking about 100 years ago, to access the even like 30 years ago, to access the forex market was really, really hard. You get you need you need to read large capital, nothing less than $10,000 yet. But now we can access the market with even $5 safe because of what brokers. Brokers act as middlemen. You give them the money, they connect all to the market, then they collect commission. Broker collects commission from all your trades. You get so they collect commission from your trade. Then leverage. Leverage is something that works hand in hand with broker. Leverage is the borrowed funds. You remember what I just said about broker being what is connecting to the market? I also said something that back then, the minimum amount to trade the forex market was $10,000. Where leverage comes into play, the broker is borrowing you so amount. Let's say you want to place a trade and that trade can only be open with $1,000 and you get my point, you are having $100. This is where leverage comes into play. Leverage on the broker will be able to borrow you $900 to add to that your $100. So that position will be able to open. That's why you see some position we open. Those positions are not supposed to be opening because the reason why those positions are opening is because of the leverage we are using. You get some people will set their leverage to be small so that they will not gonna open big position accidentally. Because broker will just borrow you the money, open the position. Once you lose their once you take loss, they are not losing anything. Rather, you are the one taking the loss. their borrowed funds is still secured. You get. So these guys are very, 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 very. I'm talking about very smart. They are very, 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 very smart. You get. I'm coming, guys. So these guys are very, very smart. Though there's something I always say: broker is not designed for you to succeed. That's a lie. I'm not going to lie for you. I'm not going to say broker just do their job. I'm coming, guys. Let me share my screen again. The network here is really, really bad. I don't know why it's like that. For some time now, and I'm actually using a router. For some time, the MTN network here has been really, really trash. But so, like I was talking about broker, I said broker, they are like middleman. They connect you to the market. That is their job. Then they end up collecting commission from the profits you make. Okay. So that's their major job for you. You can also imagine the broker to be bank again because you can also save your money there, leave your money there. But doing that, you make money through the bank. So own banks, all these bank we go and deposit our money into, save money. What the bank use our money for? They use our money to trade forex. That's what many people don't know. Your money when you keep for bank they use our cash out. So that's what broker stands for. They are like big buyers that connect the small buyers. You get. So like a big canteen store who count for the major market. Then now we be small buyers go they count from the big canteen store. Yeah. So the next thing we'll be talking about now is time frame and candlestick. They work hand in hand. Yeah. For time frame now, we have what we call time frame on the market. In order to understand the market movement, you need to understand the time frame you are working with. Yeah. If you can see my screen now, you will see this particular section now. This place now where my mouse
I no
is,
dey
you can
see
see
screen
one.
oo. I no dey see screen oo.
Nothing
See
on
that?
screen.
Okay, let me share the screen again.
I think he wants me to talk because the company's partnership with LinkedIn and Telegram.
Let me share the screen again.
Yes, yes, abeg.
So that's why it that the next one.
Can you see the screen now?
No,
Just come, you share the screen. Just come, you share the screen.
The screen is still not displaying.
no
Your
sir.
screen is visible. It's just, I think it's possibly the person's network.
Okay, let me leave it live. I'll be back. Stay there.
The-
Let us
Very
have
bad,
a
so
as for now.
a very bad network for here. Ete, bad network for here.
more. No videos. They cannot just talk. We need talk. Safe.
All right, I'm back. Let me try sharing the screen again.
Um, until then, um,
Now he's back. Now he's back. Let's try and mute our mic so to stop the breaking.
Can you guys see the screen now?
yeah.
All right, let's proceed. So, like I'm saying, if you look at this section where my mouse is in the screen, you'll see 1 minute, 3 minutes, 4 minutes, 5 minutes, 15 minutes, 30 minutes.
I'm still not
One
seeing the
minute.
screen.
Well, you guys are
Okay.
still on the screen.
Cannot see it. Continue,
I don't
please. Your
think
screen is visible. What you are just going to do is when you are done, possibly just send the recording to the group so that uh, the persons who cannot catch up while the class is live, they will be able to watch the recording because I think it's just their network issues. But your screen is visible. Your trading view is visible.
How many wait, how many people can see my screen? If you can see the screen, say you can see the screen. If you can see the screen, guys, please say you can see the screen so we can proceed.
I can't
I
see the
can't see the
screen.
screen here. When? How? I can't see the screen here.
Okay, hold on. What about now? Can you see the screen now?
No, sir, I can't see the screen.
Wow.
No, no, no. Bad
No.
network. I think the network is bad here.
Oh, boy.
Can't see the screen.
Come on.
What about now?
No. Can't see it either.
The majority can't see the screen. Like the majority people can't see the screen. Like most of us can't
Okay,
see the
let me
screen.
let me check something through my phone.
I just took a screenshot and dropped in the group.
so.
Network, voila. I'm coming. I'll work on it. Just give me a few minutes. Just stay tuned now. You guys should stay tuned. I'll be back in next 1 minute. All right, I'm back. Seems like it's network issue, honestly. What about now, guys?
Yes,
Yeah,
yes, yes.
Can you guys see it now?
Yes, sir. Yes, sir.
Yes, yes.
Clinton, I don't know if you are aware, but there's no audio from your end.
Ooh, sorry, bro. Sorry, bro. All right, let's proceed. So, like I was saying, if you look at this edge, you will see the time frames there. You see 1 minute, 3 minutes, 5, 15, 30, 1, 4. You can set the time frame you want. On each time frame, you see the movement of price at that particular time frame. You can decide to say, okay, I will be following this particular time frame to track the price movement. Or if you want to become a swing trader, you cannot be monitoring the charts 24/7. It's okay, I want to be monitoring 1 hour. So each movement on the 1 hour, that's what you will be monitoring. If you look to this corner at my right hand side, you will see the price movement here. Where my mouse is, you can see my mouse. You can see these numbers here, 1.17000, just like that. These are price. So you cannot just be tracking this place. You need something to move to know the current place price is. And if you look at this particular purple sign here, that is the current price for the euro to dollar. You get, that's the current price for the euro to dollar. So meaning one, so that's the current price of the euro to dollar. Meaning 1 euro is equivalent to $1, 1 cent, and 17 cents, 433, something like that. So these candlesticks now can easily help you navigate the movements of this whole thing. Again, once the candlestick is going up like this now, once the candlestick is going up, you will see this purple thing moving. So you'll be able to read the numbers as it moves. You get, you'll be able to read it as it moves. Then you can be able to use this candlestick to predict the market. You can say, okay, if price reach this particular number, price will fall to this particular number. Then you take your buy from that upside, sell to this downside. You get just like that. You can take your buy from here to the up, sell from here to the down. So candlesticks are visual representation of price because you cannot just enter and not see anything. You just know okay, price they move. Oh. We like the example I give that the USD to the naira once price is going up, the naira is losing value and the USD is gaining more value. You get so in order to be able to track how price is moving up, so you can be seeing it back to back rather than just searching it online. You can see it constantly how the price is moving. You get so you'll be able to know how much for a specific thing. Again, let me swap this to BTC USD so I can make the explanation more easy. So far this is BTC USD. Like I said, the price of BTC to dollar is equivalent to the current price now. Let me clear this whole chart so that this thing will not be complicated. Let me clear my entire chart. 202 drawings. So the current price of BTC to the US dollar is at 122,609. You can see it just went to $620 again. So BTC is gaining a lot of value compared to the dollar. So the more price keep going up, the more BTC keep gaining more value. Once price starts falling down, BTC will be losing value. Then the dollar will be regaining its value towards the BTC pair. So the candlesticks now, they are what will help you navigate. Now you can be able to use this candlestick to see, okay, price is going up, price is dropping, price is going up, price is dropping, price is going up, price is dropping, and so forth, just like that. The candlestick will help you navigate the movement of price. So with the candlesticks, you'll be able to see the current price of BTC. So on each time frame, the candlestick you see on that time frame formulates on that time frame. Every candlestick formulates on that time frame. Please, hope you guys can see my screen, please. So, may not be like I talk to air.
I hear you.
Can you guys see the screen?
Yes.
Yes,
Yeah,
sir.
yeah, yeah, yeah.
Yeah, that's the most important
Yeah.
thing for the lesson. Again. So
I can see the
once I'm
screen.
done, I will also be uploading this video on YouTube. The entire class session will be uploaded on YouTube. So, like I was saying, the candlesticks now will help you navigate the market. So when you come to the market, you see this candlestick. This candlestick are the movement now you start looking at. You get so by the time we start learning market structure, I'll show you things that okay, these are the people in charge, these are the people in charge. Let me change these candles to the original color. On your trading view, if you install the trading view app, like I said, you will see the trading view, the buy candle are green. The buy candles are green. The sell candles are red. So you can customize it. I was the one who customized my own to purple and black. So this is the original color for the buy and sell candle. So let's go down to the 1 minute. Every candlestick now you see on the 1 minute, each candlestick now generates under 1 minute, generates and fully formulates under 1 minute. You can see it's almost a minute. Okay, new candlestick is about to form. In the next 1 minute, another new candlestick formulates just like that. So if you go to 3 minutes, it takes 3 minutes for each candlestick there to formulate. On the 5 minutes, it takes 5 minutes for each candlestick you see on the 5 minutes to formulate. Same on the 15, same on the 30, same on the 1 hour, same on the 4 hours. So if you go to the 1 hour candlestick, you see 1 hour candlestick, meaning this candlestick that is here now, this was an hour ago, because this is the current hour now. This was an hour ago, this was 2 hours ago, 3 hours ago, 4 hours ago. You can count it like that. So if you calculate 24 of this 1 hour candlestick, it will give you just one candlestick on the daily time frame. The 1 day time frame, one candlestick forms in 1 day. So it takes 24 hours for one candlestick to form on the daily time frame. On the 1 minute time frame, it takes 1 minute for one candle to form. 3 minutes, it takes 3 minutes for one candle to form. 5 minutes, it takes 5 minutes for one candle to form. You get 15 minutes, it takes 15 minutes for one candle to form. 30 minutes, same thing. 1 hour, same thing. If you calculate the daily time frame, if you calculate 30 days daily time frame, it will give you one candle on the monthly time frame. If you can calculate 4 weeks candle, it will give you one candle on the monthly. Similar to how if you calculate 7 days candle, it will give you one candle on the 1 week time frame. So that is what candlestick represent. Let me break down candlestick for you guys now. We have the open and close of a candlestick. We have what is known as the open and close of a candlestick. This will not take much time. Let me change this to red. Let me change this to green. So the red candle simplifies the buyers. It means that buyers are the ones in charge. So once you see the red candle simplifies buy. Green candle simplifies buy. Green candle represents buy. So if you see the green candle, it says buy. If you see the red candle, it says sell. You get that what it stands for. I'm not saying you should just see red candle and green candle, they immediately start buying and selling. There are things that play factor there. You get red candle represents sell. Again, so the red candle represents sell. We have what is known as body and wick. So I will draw the wick and I will show you the body. I want to give you guys one kind of funny, complex explanation today for these candlesticks. This is the body. This entire structure is the body of the candle. Then these small things are known as the wick. You know when you buy candle at home, the candle have wick where you light it. That's what these represent, wicks. Okay. So these are the body. This entire full structure is the body. And these small parts are the wicks. Again, that is what those things stands for. So let me show you on the live chart. This is the daily time frame. This is your entire candlestick body. Yes. This is also another candlestick body. And if you see this candle now, this candle have what we call wicks. These are the wicks. You can see them. That's one wick there. This is another wick at the bottom here. Let me zoom in perfectly. You can see the week. We call them weeks. I'll explain what those weeks represent in the market. This is also another week here. Another week. Right, this entire base structure here is the body of the candle. Again. So now back to the candlestick. The candlesticks now, the explanation I want to give you of the formulation of candlestick is simple. Every red candlestick opens at, okay, let's start with the green, then we'll go with the red. Again. So every green candlestick opens from the downside, which is here. This is the open of the candle. Open. Similar to how markets daily open and close. You get, and this is the close. And every red candlestick, this is for the green. Why every red candlesticks opens at the up and closes at the bottom. The reason why it is like that, and when you see candle with wicks like this, when you see the wicks like this, I'll explain what these wicks represent in the market. So what these wicks represent is the high and low of the market for the day, of price for the day. Let me put it like that. So since we are using the daily time frame, let me explain it with live candles rather than the ones I just drew. Let me explain with the live candles. So the explanation I want to give you guys now is a very simple explanation. What this thing does is simple. You can see the green candle now. I said the green candle opens at the bottom. So this now is our open of this green candle. This is down here. Not where this wick is, but this is our open. So imagine you are going to the market to buy something, and market opens around 6 a.m. in the morning. By the time market opens, the price of fish, let me use BTC at this particular one now. Okay, if you see now, when price opened here, the price of BTC to the US dollar was 118,667,000 dollars. So this was where price opened. The market opened for that day, and this was the opening price. So price dropped that same day. By the time got to like all those kind of 10, the price dropped to $118,290 that same day. You get. But before market close, price went so high. Market is going to close by 6 p.m. The price of that fish now, which is, we are using the BCC number, so for you to, the price of fish went so high that day that it went to 121,000 from 118,000 opening price. It went to 121,085. As at then, time was 4 o'clock in the evening. So price dropped again that same day to 120,622,000. You get. before price closed at 6 p.m. Opens at 180, fell down a little bit, then went up to 121, then fall down back small, then close at 120,600 dollar. Let's put it like that. Again. So this is the highest point price reached that day, which is the highest price, the price of that particular thing got that day, and the lowest point price got to. So that's what those wicks stands for. You get. So let me explain with the red. So this red candle here, now we have our wick. The moment price opened, this was our opening position. Price opened here as at 115,298. Then went up a little bit from 115,444,000. You get. That same day, 6 a.m. in the morning to like 10. This was the amount price went to. Then before price closed, price dropped so bad that it got to 111,801. Then price was able to go up a little bit before the market closed. Then the market closed at $112,709,000. You get the explanation. So that's the simplest way I can explain this candlestick for you. So even if you see weird candlesticks like this red one you just see, this kind of small tiny candlestick, same explanation applies to it as well. This is the opening position. Price went up to this particular zone, and price dropped to this zone, went back up a little bit, then closed here. You get. That's the same thing, same explanation for it as well. Same. Okay, coming next. So same thing. Let me unmute some people. So same explanation for the small candles you see here, even weird candles like this. You can see how thin this candle is. So that same explanation is what you use for it here. Market opens here, around this zone here. The price spiked up that day, fell back down a little bit and come back here and close here. So you use that same explanation for it as well. So that is for the candlestick explanation. So whenever you see candlestick, know that the candlestick opens and closes like a regular market. So what moves the forex market? There are things that, like I said, there are people who call market makers. Okay. Market makers, these are the people that actually forces this market to move. All this movement you see, there are people, it's multiple people diving in, multiple money placed in the market. That's what causes all this push up and all these things you see. You get multiple investors and all. Note, all these, we retail traders, we don't have the funds to push this market. Our funds just be like small shingele. Banks, you get big institutions, Netflix, Tesla, big companies all around the world. Those are the things that push this market. You get those kind of institutions. That's why you see when so time so sessions open, you see market start spiking because bank door open by that particular time. We get many money. They could invest better block. So if many block don't do it, price must go up. It is a must. Yeah. So down to the last thing. This thing I want to be talking about is how to use TradingView, and I said I will talk about technical analysis as well with it. Technical analysis is you being able to navigate the movement of the market. So by being able to navigate, because you are not there around the market, you are not working with a big company, you are a retail trader working from home. In order to see the chart of what each thing is doing, you get, like, you know the work for Netflix. Netflix, let me show you guys something so you can confirm what I'm saying. Netflix. That's it. People trade Netflix. It is a pay. Yeah. So stock, we call these stocks, if I'm not mistaken. You are buying stocks from a company. It is a company stocks. Those are things you trade again. So you are not working at that company. So in order to see the particular price that company share is holding, so you can, okay, can I buy this company share or can I sell this company share? That is what trading view is for. Similar to how you cannot know the current price of the market for currency pair, the current price to dollar to naira, or say you browse out. But with the chart, you'll be able to see it as it's moving. So you'll be able to know, okay, I can start buying USD down now. It will be increasing to naira. I can start doing this. You get, that's what this chart is for. You get, is to know the movement of price. So technical analysis is you being able to know the movement of price and being able to navigate through the movement of price to make money from it. That's what technical analysis is. So all these tools you see on my screen that I'm drawing like this, these are tools that help you to trade. So I also make a separate video on my phone on how to use TradingView. I'll post it on our group, but because I'm using a laptop right now and some people are using their phone. When using TradingView, there is a particular tool you see on your TradingView known as the drawing tool. In the drawing tools, the tools I use are the rectangular tool. I use that to mark out my point of entry. Then we have what is known as the trend line tool. At least this night, one person should master the trend line tool. Just draw. You don't need to do anything reasonable. Just draw nonsense on your chart, on your screen like this, then send the screenshot to the group. At least somebody should do it. You get. Trend line 2, you will also find that on the drawing space. Let me use my phone so I can be telling you guys exactly where you find it. So once you go to the drawing tools, you see trend line. If you go to trend line, you will see the trend line tool there. You can add it to your favorite. You will see the ray tool. I also use this ray tool to mark out trend lines as well. These are for these tools. You will learn to master them because one of the strategies I will teach you guys requires trend line, how to follow the trend of the market. This is a trend. This is a trend. Call this a downtrend, meaning price is dropping. So we are following the trend of the market to sell. You get. So you will need the trend line tool to be able to use this to navigate it. Then we have the horizontal tool. We have the horizontal tool. You also find that on trend lines. Why the rectangular tool? The rectangular tool, you find that in geometric shapes. That's where you find the trend line tool. The trend line tool, you find that on geometric shapes. The path tool. The path tool is also another nice tool. You can use it to mark your high, your lows, your high, your low, your high, and so forth like that. That's what you use the path tool for. Also on geometric shapes, text tool. You find text tool on annotations. So for the meantime, you need the trend line, the part two, the rectangular two. Those are the main things you need first as a beginner. Trend line, rectangular two, part two. And if you go to forecasting and measurement, add these two things. Long position, you see the long position there, add it, and short position, add it. The original color for this is green and red as well. Green, the original color is green and red as well. For this, I was the one who changed it to, I was the one who customized the color like that. So add these two too. The short two is for selling, the long two is for buying. You get, you add them as well to your favorites. Add it to your favorite. Once you hold on it, it will show you the option to favorite it like that. Once you've done that, then you can also send the screenshot to the group like that. So on our next class, we'll be talking about nice. I like it. I like it when people are paying attention. Very, very nice. Nice one. And also, if you look at your trading view, you see something that looks like volume. You get that thing that looks like volume. If you want to reduce it, just click on. If you want to remove that thing, because that thing tends to inconvenience trading sometimes, just click on the same drawing, go down to once you click on the drawings, click on tools, then you see remove all. During that remove all, click on it and also remove the indicator. Press remove indicator, that one will be removed from that place. So on our next class, let me look at what we're talking about. We're talking about things like pips. I want to walk you guys through the steps step by step. So by the time we get to market structure, which will be the most, I will teach you guys multiple strategy, support and resistance, trend, the QRM pattern, you get double top pattern, using basic price action, you get. So you will be the one to pick one particular entry type that you say, okay, I will just master only this one. That's it. No need for you to have multiple entries and you jump from this one, jump from this one. Pick one, master it. You get. So in order for you to be able to enjoy anything I will teach you, you must understand market structure. That is the honest truth. If you don't understand that thing, if I like, let me teach you for 3 years, you still be hitting stop loss. You get. I learned how to trade by myself from watching videos, but I was hitting stop loss. The strategy I'm using now is something I taught myself. Almost all my strategy I taught myself. But the one thing I learned from a professional was the reason my profitability started, which is market structure. Then I would do waiting I watch from TikTok and YouTube. I will still be hitting losses. Then I was like, Forex is a scam, all those kind of things. So the day I paid for mentorship, I'll go to class, could be like waiting I already know that they teach. So one day my mentor explained this and say, if you don't understand market structure, you and stop loss will be best friends, then it will look like trading is a scam. So he explained it that day. I'm telling you, he explained something for me. That was like 4 months ago. That should be like around May that he explained that. Is it May? Okay, April. Early April. Because after then I lost one money like that, $4,000. So after he explained it, I said, okay, let me try this thing. I started practicing only market structure. Then during understanding it, I realized that even me, I started realizing that this thing I can use itself without strategy. I don't even need stop loss TP just so that once price get to this particular place, price will drop from that place. You get, and that was when my profitability really started. And since then, though I never reached that point, life is gradually, though there's progress. I cannot compare my trading skill now to then. The difference is like the sky and the ground. You get. So please, when it comes to the market structure, learn it. Because if you like, go and spend 500,000 naira for mentorship because you see the person get car, get this, get that. The reason why it look like when why many people will complain, I pay so amount, I did not learn anything, I still do not understand this. First is scam, now mentorship they the chop, now this, now this, now this, now that. It's because they did not learn the most important thing: market structure, price action. Those two things. Yeah. Because you cannot see market structure showing you downtrend and you'll be going to go and buy because your strategy is showing you to buy. If my strategy is showing me to buy, the market structure is on a downtrend, I forget that buy. I'm not taking concern that buy. You get, because once you buy, you will hit stop loss. Price will pass there, continue going. You get. I'm not telling you if you know market structure, you will not hit stop loss. You will hit stop loss. Sometimes, like I can assure you, like 80% of the time, let me even say 90% of the time when I hit stop loss, it's not because what I did was wrong. It's maybe because I entered at the wrong time. You get, then price push small back, price stop me out, go back to the TP again. You get, that's just the truth. So please, when it comes to the market structure, pay attention. If you like, pay money to any big mentor for any big mentorship. If you don't still understand market structure, they will still teach you strategy. You say, but na the same strategy me and they use now. Why you take the cash out? Me, I not the cash out because you're not doing the proper thing. So, guys, please, I just God beg you now. Don't miss that out. That's the most important topic in the entire lecture as a whole. So, next class we'll be talking about pips, lot sizes. I'll be breaking those things down for you guys. I'm breaking down pips, lot size, we get spread, and I also give you guys some insight on risk management. Our next class is on Wednesday. That's when our next class will be holding on Wednesday. So Mark, I will be explaining risk management, give you guys some few trading tips, explain pips, lot size, spread, how the proper lot size to use as a beginner, and all that will match your account. I'll show you guys some really nice pair you can start with as a beginner trader. Then after that, our next class after on Wednesday class will be market structure and trend, then price action, those three things. So after those three things, we also on our fifth class, we'll also go revision on those three things. Then we'll start with support and resistance. That will be the first entry model I'll be teaching you guys. Entries is where you enter the market for. You get, we call them strategies, but I call them entry model. You get, they call it strategy, but I call them entry model. You get, we can have the particular distance. Okay, like something like this. This is a support and resistance pattern. You can tell yourself, okay, price break past here, price will come back, tap here, will fall. That is an entry pattern. You get. So stay tuned. I'll be teaching you guys the support and resistance, the QRM pattern, double top pattern, double bottom pattern, and price action. So once you understand this, you are good to go. You'll be hitting the market back to back, back to back. But it will not take you 1 month to become profitable. It might take you 3 or even 4. Though every individual has their learning speed. Some people learn faster than some people. You get, some people will learn a lot faster compared to some people. That is just the way life works. So some people will catch it faster than the rest. So please stay tuned for our next class on Wednesday. And in case you are interested in taking my signals, register with the link I sent to you guys. The reason why I say register with the link, if you register with that link, there are some really sweet benefits. Again, sometimes they'll be giving you bonus. Yeah, they'll be giving you some bonus. Maybe your trade fee won't hit one kind SL, they'll add bonus on top to prevent that SL and stuff like that. You get, so register with the link, and I will be hosting a program soon after this mentorship. I call it the locking
But not to hear you.
We cannot hear you.
Blessing in the government.
Uh, sorry guys. My network is trip back to back, so I got to work on it. So like I was saying, I will be hosting a program I call the locking program. I did something like that. That was last year. Yeah. So in case you guys are interested, don't we'll talk about. It's a program focused mostly on making money. This week I will be supplying you guys with a lot of signals. Just stay tuned. The moment I drop them, catch them, make money from inside. You get. The most important thing about money-minded group is making money. That's the most important thing about the group, making money. Please mute your mic, please mute your mic. All right, thank you. So the most important thing about our group is making money. I call it printing. So I believe I want at least by the time say you don't boss, all of us boss together, you get everybody cash out, get and clear, we link up. One of the reason I created the group self was to get fellow traders who I could talk to because it is not easy. Some group they are not open. You cannot text. You get. But the reason why I leave the group open is because I want you guys to interact with each other, familiarize yourself with each other. When you don't understand anything, ask each other. You get. If I'm active, I reply. Yes, sir. You get. That's the most important thing because doing it alone is not easy as a trader. Doing it alone is not easy. You need someone to talk to when you are down. There are some down period you get. And forex is very addictive. When the addiction won't come, I feel drop one kind of signal for you like this, make you mount one kind nice profit. The addiction starts ASAP. The moment you make that profit, you'll be like, that's so it be, that's so it be. You want to put in more and you hit one kind of loss, then everything is all about plan way. Life not plan way. That's the most important thing. So I'll be teaching you guys risk management. You get who they do business need to know how to manage funds. Don't be too greedy. Forex kills the greedy ones. Yeah. So on our next class is on Wednesday. I'll be uploading this video tomorrow morning on YouTube. I'll send you guys the link. You can watch it. Anything you don't understand. And please, whatever you don't understand today, write me on the group. I will reply you ASAP. I'm always active. The only thing I do in my life, I'm not gonna lie for you, is write book. I'm a novel writer. Write novel, read novel, look charts 24/7, place trade. Those are what I do. Yeah. But sometimes I go to work because I'm also learning web designing. Those are the things I do. So I'm always active on my WhatsApp, looking at the chat on my laptop, on my WhatsApp, or reading novel or writing. You get whenever I have a chapter to submit, and I'll start writing. So anything you don't understand, text me on the group. I will reply you immediately. If you even want me to make a video to explain it, I will make a video to explain it. You get. So see you guys on Wednesday. Have a wonderful night.
Good night, sir.
Yeah, good night.
Good night.